Hello trader, and welcome back to this second series of those trade breakdowns. And we're gonna analyze the trade of Thursday, 14th of December. And jump into the chart. We are here, the Australian dollar versus the USA dollar. And the market, we jump into the market, and it's what's bullish, right? So what we are really looking for here is, of course, long trades. And when we go down to the 15-minute time frame, we can break down a little bit fast the structure. Here we have the breakout structure up. What caused the breakout structure? Then here, then again here, breakout structure up, then breakout structure up again. And this was the last breakout structure up, because here we have no breakout structure again. So the price start to retrace, and we are waiting the price to tap into this last sell to buy. And look at this. So in the London session, we catch a long trade right here because the price come into our zone, and jumping down to the 1 minute time frame, we can see exactly how the trade worked out. Again, we waited the liquidity to be taken, and it has been taken at this level. This was the first level. Again, in the lower level down here, and that gives us a really good confirmation to this trade. So we jump into this trade like really confident, really confident. Why? Because here we have the breakout structure down. What caused the breakout structure? This guy here. So we should be waiting the price to break up here before jumping to the trade, and that what's happened. This was a sniper entry. If you want to learn about a sniper entry, this is a sniper entry. And let's see how this trade plays out like perfectly. At 1.5, we move our stop loss to the entry point, and look at this, beautiful. We reach over 5 hour only with this trade, right? And this was a good start of the day with this trade, the only buy trade of the day. So now let's go to the US dollar versus the Canadian dollar. And here, let's see. Okay, here we have another picture of the market. Which picture is that? Here we have the breakout structure up. What was the breakout structure? This guy down here. So when the price break here down, we now in the bullish, we now in the bearish phase, right? But overall, don't be foolish and just analyze this part of the structure, because overall the real valid range was this one here. So all of those were internal structure, right? So the real breakout structure should be occur down here, and that when this happen, we start looking for short opportunity. So going down to the 15-minute time frame, we have drawn different order blocks, so waiting to price to tap in. So when London opened here, the price dropped to the downside and broke again the structure here in the 15-minute time frame. And then we have another breakout structure here. So we asked the question, what caused the breakout structure? Is this guy down up here? But we do not catch that trade. The open opportunity occur here, and with this breakout structure. And what caused the breakout structure is this guy here. So we were really ready this time to take this trade. So let's see how it's played out. And look at this, it went up, breakout structure down. Here, where is the liquidity? The first question is, where is my liquidity point? My liquidity point is exactly here, right? You have another one here, even up here, but those two were enough to take the decision to enter in the trade. We just have now to wait the breakout structure down, and that should be occur here. Let's play another candle. Look at this, beautiful. We have the breakout structure down, so we can enter into the trade, plus our stop loss just above with a little bit of buffer, and just targeting our 3R. Easy. Let's see how it played out. It went into our stop loss zone, but do not touch it, of course, and then move down to the downside. And this was another beautiful trade. So now I've shown two winning trades. So now we have two losses. The losses occur in GBP, JPY, and let's go to the chart and analyze those trades. First of all, we have to see the macro picture of the trade. Here we are in the downtrend, here we were in the pullback phase, and then the price goes down and break the structure down and kind of pull back again toward this other block zone, right? So we have two options here. The first option is to follow this uptrend until we have the breakout structure down in the 15-minute to start looking for short trade. So two options are, I follow the buy entry, okay, until I'm bullish in the 15-minute time frame. When I have the switch of structure in the 50-minute time frame, it can be a signal that we are again with the continuation of the downtrend. Okay, so jumping down to the 15-minute time frame, what we seen here is that up here we have an unmitigated OB. So here we have the breakout structure up, so we should be looking for longs in theory because we are in the pullback phase. But what's make us believe that the price should be coming now is because this zone was not really mitigated. So when the price tap in, we strike the short, but unfortunately it do not play it out, right? So again, the rules are always the same. Here we have the liquidity point right here, and after the liquidity point, we have to look and search where is the breakout structure down. In fact, it tapped into our zone and give us the short entry. Why? Because here we have the breakout structure down, and here the stop loss should be really big. So we plus our fib, our fib here, and then catch the 50%. At the 50%, we jump into the trade, and unfortunately, it the stop loss. So we have two opportunities in each other block zone, right? So the first one failed, and then we tried again. But before try again, we have to follow the rules. The rule is that we have to wait again the price to break the structure down, right? Because here we have the breakout structure up, right? It goes up, and this guy breaks the structure up because look the details. The high here is 180, 679, and here we have 180 and 672, right? So this is higher than this one. So we have to ask what caused that breakout structure is this guy here. So when the price crossed here, what we did was just jump into the trade, and again this was another fake, and we have been stopped out. So guys, this is the trade that we have been taking this week. Overall, we have 2 wins and 2 losses, but at the end of the day, we closed the day with 2,200, right? And Anyway, losses are part of the game, and we learn the most from losses. So what we can say from those two losses, maybe we should be waiting the trend change down in the 50-minute time frame, because in here the 15 minutes up occur, and we should be waiting the down, okay, the break of structure down. So overall, we are profitable, and that is the most important thing. So guys, let's connect to the channel, subscribe the like button below, like this video, and wait for the next video, the third video of this series, right? Enjoy, guys, and see you soon. Ciao.